Stay hungry, stay foolish.
So now on the Innovation Show, we welcome Colm Lyon, founder of Realex Payments and now founder of Fire. Welcome to the show, Colm.
Thank you, Aidan.
Great to have you here, and we're here in the beautiful offices of Fire. Colm, I've heard you talk so many times about culture and leadership of running a business, and it's something that's often overlooked from a startup perspective. And I'd love to talk to you about that today, just how you found the change when you implemented culture, and you actually how you went about that as well.
Yeah, sure. I guess my first thought is that it's just not straightforward. Like all these things, it's building the right culture in an organization is tricky, and it can be quite difficult to do, and also difficult to understand why you need to do it sometimes. And it's only after a period of time that you begin to realize that perhaps the culture has a big part to play in what it is that you want to do. So you kind of first of all have to believe that it's something that should be there. Sometimes as well you think that it's something that just naturally happens, and you don't realize the extent to which you can actually influence the culture within the organization, right? And then the challenge is to try and make that very aligned with the strategy as well. There was this amazing expression that I heard years ago when I was in the Stanford program for the Leadership for Growth program. And after we all went as 30 Irish CEOs over to Stanford to study strategy, in the first module, in the second module, this lecturer walked into the Stanford lecture theatre and said, "I'm glad that you guys spent the first half of this course learning all about strategy." He said, "But I hate to tell you that culture ate strategy for breakfast." And he started off kind of just saying, forget about it, your strategy, because everything was about the culture. And that was the first time that I really got, I suppose, a structured conversation around culture. Because up until then, you might have said things like, they're a great team, they're really ambitious, whatever, and you describe your people maybe in a certain way. But this was the first time that I actually sat down and actually thought about, in a strategic way, what was culture in the company and how important would it be? And I think the emphasis became very clear to me that, unless you could build a team that was aligned in their behaviors with, the strategy, that you'd find it difficult to achieve that strategy. So you could have a great strategy, but you could have a group of people, and it could be a small team or a big team, it didn't really matter, but you'd have a group of people that maybe weren't aligned towards the achievement of that goal, in which case then you wouldn't get there. And that was the essence of my first acceptance or opening, if you like, to the idea that the culture would have a huge part to play in our success.
It seems like it's a very American thing, as perceived from Ireland, because we see it as a bit fluffy and a bit, that's all the Americans talking. But it's so important, and I think today more than ever before, it's become the differentiator.
Yeah, absolutely. I was talking to some young people recently who work in multinationals, and culture can sometimes be mixed up with kind of inappropriate team meetings and huddles and things, right? And pool tables and whatever beanbags in the corners. That's not culture, right? That's nonsense, right? And some people were saying to me they didn't like the idea of the huddles, and they didn't like the idea of having to talk about stuff that they didn't want to talk about with other people. That's making people feel uncomfortable. So, and that's kind of trying to indoctrinate people. That's not developing a culture within a company. I think what I learned was that it's not something that you force on a group of people. So I think the way that you would approach it is you'd say to somebody, and again, it can be a very small team. It doesn't have to be a big team, but you'd say to somebody, are we aligned in the achievement of this goal that we want to try to do? So we started off by really just making sure that everybody on the team was on the same hymn sheet in terms of where we wanted to be. And we found out that we weren't. which was interesting because we hadn't had maybe that conversation before. So we would have had people who would have said, I don't want to work for a company, of this size. My dream was always to work for a company 10 times this big. Other people would have said, well, I'm quite happy where we are today, and I kind of think we should take every Friday off and play golf. So there's not alignment therefore between the people. And that's what you need to try to find. So culture for me is not about, as I say, the things on the walls and the hotels and the pool tables. Culture is about, have you got real alignment in terms of behaviours between particularly your leadership team and then throughout the whole organisation as well. That's a good culture because everybody's behaving in a way that's consistent with achieving the goals. So we tended to start the culture conversation by, first of all, discussing our vision of the future. And it was a really good exercise because if you start off a conversation about a business, and you want to say, a lot of people will say, well, where am I today and where do I want to get to, and then how will I get there? And we discovered that if you actually reverse that conversation and describe, first of all, where you want to be, and let that be the start of the conversation, it changes the whole landscape completely because you find out that different people want to be in different places, and then you have a great conversation. Well, hang on, we're not all aligned here. We need to be the same. So is our goal to achieve, 3,000 customers? Is our goal to achieve 10 million in revenue? What becomes the vision? Not constrained by where we are today. So the culture conversation, I think, was aided by a very healthy discussion around a vision which wasn't constrained by the current position that we were in, if you know what I mean. So the conversation started off saying, right, let's talk about where we really want to be, not where we are, right? Because we know where we are, right? So let's instead forget that and write down, this is where we want to be. This is the big, audacious goal that we want to set. This is our mission. This is our vision. And you do things like you write an article as to what you think your company would be like if it was profiled on the Innovation Show in 3 years' time. If you saw an article in the Irish Times about your company in 3 years' time, what would you think that article would say? And can you write that article today? So you're consumed by this idea of what you can be and not what you are all the time. And that becomes a really positive fuel for everybody in the organisation because you're driven by the vision, which I think you have to be. And then that's part of the culture of the organisation because suddenly everybody in the organisation then is aligned towards the achievement of that vision. Everybody's been involved in creating that vision. And from that you can derive things like mission statements, and which are the nice kind of, corporate businessy type words that you can put and stuff. But in the end of the day, the best vision that a company can have, as I say, is an article that the guys have written themselves about what they think it's going to be like, and that's simple as that.
That's brilliant, because I remember Jeff Bezos had this thing where anybody who had an idea, he'd ask them to write a press release for that idea. So he'd write the press release, and it sounds very much like that. And
what you do then is you kind of say, look, if that's what we all want to be, and immediately you find well, that's okay. Everybody's kind of, thank God you said that because I thought we were going to be just carry on the way that we were, And so people kind of come out of the woodwork a little bit. That's what I noticed. And people who maybe were kind of more in the background would come to the foreground as well, in those conversations. And so after you do that, then with the next step in trying to derive the right culture was to try and identify what we would call the values. And again, you've got to be careful because it's not like values as in the things I want to hang up on the wall. And this is because if you're doing this for the sake of doing it, which I've seen as well, which it really doesn't work because it becomes quite insincere. And people spot that a mile away, and they kind of say, you don't really mean that because you don't do as you say. You behave in a different way, and so you don't actually believe these either. So for the values, I think what values are to me in an organisation are behaviours that you want to see exhibited in the organisation. So in other words, if you think about things like a people value or a person value or the development of people within a company, you like to see people, at meetings being able to speak. You like them to be able to speak in an uninterrupted way for a couple of minutes at the start of the meeting so everybody has a say. And then you like to see, if you like, judgment deferred till later on in the conversation so that all the ideas can be tabled, even if they're off the wall, so that there's a structure to the process of actually making a decision, right? So this becomes the way in which you do things becomes the behaviour. And so we would have spent a lot of time trying to design and trying to identify what were the behaviours that we felt would be consistent with the achievement of the vision. So again, when I talk about values, I don't talk about your own values as, are you honest or integrity or anything like that. It's not about you as a person. It's about the values that we think should be consistent with the manner in which people behave in this company if we are to achieve this vision. So if we're going to achieve this vision, which we've now articulated out and written about for the future of the company, what do we think are the values? So what are the behaviours that we'd like to see exhibited? We'd like to see, things being really secure. We'd like to see customer service being, at the forefront of everybody's mind. We'd like to see things like quality, perhaps, becoming ingrained in everything that we do. We don't want to be making any mistakes at any stage. We might want, to see ambition and people being driven and people going the extra mile, for example. Okay, well, these are all good words, right? These are behaviours that you'd like to see exhibited. And the wonderful thing about all this is, in the end, when you start to define that vision and you start to define these values and you write them down in a PowerPoint, you then have what's really a superb management tool, because what you've got then is a document that you can discuss with people. And when you're sitting down with people, you can kind of say, now, is your behaviour consistent with this? Are you actually aligned with what we want to do here? And if that is the case, well, then you're going to love working here. You're going to really like it because it's going to work for you. However, if you find that somebody's not working out right, invariably what you find is that they're behaving in a manner probably inconsistent with some of these values that you've got within here. And then you can kind of say, we need to have a conversation. And I remember a great coach I had, what he told me was he was going to give me the equipment that I could use to have conversations with people that I wasn't having up until that point in time. So it meant that I was able to talk to people in an overt way about their behaviours and its consistency with our values. And therefore, if you want to really succeed, and if this company is going to succeed, it's not just about doing the job, but it's about doing the job in a manner consistent with what we've all agreed. And they're not my values either. They're not the CEO's values. They're the values that came from the team. Everybody on the team participated through a workshop and picked these values for us.
That's brilliant. And can we overlay that with the success of the company? Because you saw a direct correlation between that and the absolute change in the company and the value of the company, etc. It totally changed it.
Yeah, I think as a company we were, I wouldn't say drifting, we were growing, and we were growing, in I forget, maybe 8-9% per annum. So it was reasonable, but we knew that the growth rate wasn't, after 9 years in business, we felt that it just simply wasn't what it should be. And it was around that time that the Stanford experience had come up. And I think we felt that strategy and culture and whatever it might be, that all these corporate kind of leadership things that would come up on the agenda before. But we often described our strategy in terms of history. We would often describe it in terms of saying, well, our strategy is to continue really just doing what we're doing at the moment, And it was that kind of transformation when we kind of said, well, you know what? Like, what if we said we wanted to double the revenue of the company in the space of 18 months? What would it take to do that? So something completely out of the ordinary, something ridiculous that we would never have achieved if we'd thought about that in the context of where we were and what had just happened, because we hadn't grown by that. And I think we put these big plans in place, and we recruited some more people, and we opened up new distribution channels, and the revenue went from, I think it was 9 million one year to 14 million the next year to 18 million the next year. So literally in the space of over the 3-year period, the revenue did double, and it was incredible. And the team, the whole thing changed. And I think I'm not going to say it's just because of the strategy, but it was a strategically driven organization rather than a customer-led organization. So we were very much driven by the strategy. Everything was about the strategy. Everybody would sit down every quarter with their team leads or with their managers. They'd be reviewed, and they'd have conversations about their behaviours and its consistency with the values, as well as looking at their performance in relation to their objectives. And we would spend a lot of time off-site. Everybody was, bought into these values. There were prizes and exercises and conversations about the values going on the whole time. And the team worked incredibly hard, and the team were really focused, and everybody was bought into this vision that this is what we wanted to achieve. And that's incredibly important, because sometimes, as a CEO or whatever, you can just assume that everybody in your company is bought into this vision because you've said that's what it should be, but they're not, because they haven't bought into it. So you have to bring them in, and everybody has to be aligned. And the team loved that. And the team, that's a great team, when you build up a team like that and becomes a winning team, that's what people want to be a part of. I mean, people want to be part of winning teams. And in the end of the day, that is what it's all about. It's about winning.
And it's funny because I'm sure you saw as well, and when you do that and you create that culture of winning, the ones who don't want to win just leave
completely.
And that's what you don't set out to do that, but it just happens naturally in any team.
Yeah, I mean, I think one of the greatest things that you get in business is churn.
It's really so important.
It really is. And I think that there's another great expression that I heard over there, was that the legacy that took you here was the hardest thing to change when you want to move forward.
Yeah.
And I remember, it is so true. And you look at many industries. I'm always think about Aer Lingus and Ryanair. And could Aer Lingus ever have become a Ryanair? Well, probably not, because sometimes it's more difficult sometimes to change something than it is to create something new. So, as a business person, you often keep your eye on not so much, obviously growing things and getting teams and leading teams and bringing teams and achieving success in business. But then there's also creating things, and creating new components as well, either within organizations or as new organizations. And sometimes it's easier to create those new teams than it is to try and get an existing team to do.
And I have to agree with you. Ryanair, for me, is one of the companies who really just went and did it and showed. Because I do think we've a leadership problem in the country, in Ireland.
Yeah.
I think we've a huge leadership problem where companies are drifting and people aren't changing, and some people are still living in a mindset of entitlement rather than enablement, and they're not going to succeed. And Ryanair just went, you know what, we're going to do it. We were slow, so we're going to build a totally new department, and which they did, a physically new department, new people, and just start it all over again. And it's reflective in their stock.
But you also know that everybody in Ryanair is aligned, including their customers. Everybody knows the strategy. Everybody knows it's the one aircraft type, it's the one maintenance. It's the low. It's not that he's a low cost airline. That's the thing from a low fares airline. So they keep the cost base down, and so that as I say, the devil on the street knows the Ryanair strategy. So they don't have a problem communicating their vision and their strategy. It's black and white, and therefore everybody understands it, and people join that organisation because they buy into that strategy. So he's got that fantastic alignment going on. He's a superb leader.
Yeah, but it's so true what you say about so many organisations just drifting. And I was going to ask you this question. So the bigger you get, obviously, the more problematic that becomes. And you kind of alluded to it where you were saying your team had mini meetings, I suppose, and it became team within teams. Is that how you keep up with that? Because obviously you as the leader can't mind or implement the strategy or the culture across every part of the team, especially as it gets bigger and bigger.
Yeah. I think as it gets bigger and bigger and bigger, I found that I would have spent more time, Jack Welch used the expression, being relentless and boring in the communication of what it is that you were trying to achieve. And I suppose I did get a bit boring. and being relentless about constantly communicating what the strategy is and what those values are, and what's our proposition to the customer, and how we're structured and organised. So they were the four pillars that we used to use: the vision, the values, which you combine to create a good culture, and then we would talk about our proposition to the customer and why it is that people buy from us, and then we talk about how we're organised as an organisation. What control and governance do we have in place to make sure that that things are as they are? Do you know your business is operating as it should be? So I think you find that, and we certainly found that putting good control in place and good governance in place was a big help to us as we got bigger. So as we grew, we put in a lot of our monthly management meetings, our weekly performance meetings. You could always see what was going on, so that there were very few surprises, if you like, as you were growing. But I think, even though you can grow, yes, the challenge of keeping that culture alive is it's still there, but it's not. It's not any more challenging, I think, than it is when you're small.
Yeah.
I think the real challenge, I think, is for small companies perhaps to recognise that they should do this early on.
Yeah.
That's, I think, a better kind of direction, that if you're small, it doesn't mean that you shouldn't discuss the vision of the company and the values. Because if you if you're working in a 2, 3, 4 man like startup, and if you find out 18 months into it, after you've all done agreements with the shareholding or something, that this fella over here actually wants to go traveling for 4 years, and he doesn't actually buy into this journey, and he doesn't buy the vision because he wants to actually develop something else, so it's a bit late. So you want to start with a group of people who are aligned. So I think spending a bit of time, even as at an early stage company, looking at your vision is a great idea.
Yeah, because you end up, I was thinking of you, because you end up actually, you're operational, because you have so many companies, and I think the ones that are really bad with their culture are the ones that have an excess of middle management, who are managing up and sideways and probably not even managing down to their team. But when you're starting, and you were very operational because you were working in the business and didn't have the time essentially to work on the business.
Yeah, and I think now I'm looking at Fire, and we've spent a bit of time in Fire, trying to put new, we've come up since we acquired it last 18 months ago, and we're trying to redirect it, and it's taken a number of different staff offsites to recreate that vision as well, and to try and work on that vision, and to try and talk about what it is that we want to be. And inevitably, as you do that, not everybody will buy into that new journey as well, So, and I think that's okay. That's nothing wrong with that. It's better to have that conversation than not have that conversation. And I think being open and honest and straight about the fact that, this is what we want to be, but I don't think that, you're necessarily going to be part of the journey. Yeah. That's fine. They also had this great expression called the Russian lunch in Stanford, where they used to say that the CEO would take you out for lunch, but just the CEO went back to the office. So I wouldn't recommend Russian lunches, but certainly, being straight and being honest about this is what it's really just this is what we want to achieve as a business. Are you on board or not? And if you are on board, great. Let's try and work together to make this happen, and put those pillars in place, and build the team up slowly. I think recruiting people slowly is a thing that I've noticed over the years is really good advice. Yeah. And I heard an expression once that when you think you need another person, wait. And when you think you really, really need another person, you wait. And when you really, really, really need that person, you still wait, And then, premature scaling is one of the things that kills companies. They raise money and they go out there and they recruit loads of people and nothing happens, People aren't necessarily the answer. The answer is about your proposition. The answer is about, building the right organization and engaging and learning and getting a little bit of product out there at a time so you can get the feedback and try to understand, what it is that people want. Because it's very challenging. And, even now in the financial services world, I'm looking at what we're doing, and it's really challenging, and you're going to make lots of assumptions about what you think people want, or businesses or personal needs, it doesn't matter, and you can be completely wrong.
I made so many mistakes that running surveys, like SurveyMonkey surveys, and asking people what they want. Such a bad mistake. And then they go, yeah, I'd love that. And then they don't use the feature you build, you spend months building. No. But can we move on to Fire then now? Because Fire is such an exciting time. And you actually told me about PSD2 in plain English. And we've had Paul on the show.
Yes.
And it's such an exciting time. And it's like you've had your finger on the pulse for this moment when PSD2 is about to drop, and you're building this product that's going to align perfectly with that future. And so, can we talk about Fire?
Yeah. No, I mean, I think what's happening in financial services is there's a lot of different, I suppose, drivers or forces of change which are kind of coming at the same time. You have obviously the obvious things are things like technology and mobile and stuff like that, which is pretty obvious. That the whole access to my financial service is now up for grabs. It's changed the way in which I consume it. I often describe it as the way I listen to music. That I say to people that I used to listen to David Bowie on vinyls, and then I moved on to cassettes, and then I moved on to whatever was CDs, and then iPods and whatever, Spotify today, right? It's still the same music, still the same song, right? But I'm using something different to hear that song and to listen to that song, right? And so I think banking and financial services are heading that same way, and that I still ultimately will have a loan, but the manner in which I, acquire that loan and the manner in which I repay that loan will be entirely different. So in other words, we're going to separate out the financial service itself from the access to the financial services product. And as I say, that's been brought about by changes in technology, particularly around the mobile phone. It'll be brought about by changes in the legislation, so the Second Payment Services Directive, which is really intended, and it's a European-wide directive which is going to go live in 28 countries across Europe in 2018, and it really just paves the way for new people to come into the market to provide these access products to allow you to access, for example, your account with a bank, but through a third-party application that they're allowed write. And there's also changes coming. I think from an investor perspective, investors really like this sector, and that in itself kind of sometimes fuels the development because the cash is coming into the sector, which is helpful. And then I think by far the biggest thing that's changed, though, is the consumer's expectation as to how they consume these services. We've all changed the manner in which we consume media, right? It's completely different. We've changed the manner in which we listen to music. We've changed so many ways because the technology has forced us to do that. But it's not just the technology that's changing, but our own consumer kind of expectations. So when we go into an app on the phone, there's probably 3 or 4 apps that you use all the time, like WhatsApp and Messenger and, whatever bit of news, and that's it. And then all the others are all on those other screens that you get to every now and again. So how do you become relevant, and what's the consumer expectation? And the consumer into the future will, be accessing his financial service products, and he'll, hold his button down on the icon, hit the red dot, and you're gone. So you as a provider are just, you're off the phone because it doesn't mind, downloads another app, puts in his credentials, and now can connect to his account that he has with you through a third party. So that's what's coming. And so, well, in preparation for that, the way we would see it is that, things need to change from a financial services perspective, for sure. That's for sure. People need access to products in a way that's different. They want to be able to, well, first of all, they want to be able to download apps, and they want to be able to open up accounts online in a very digital way. They need to be able to go live very quickly. And when they need to be able to, if you like, get extra services from you, they shouldn't have to go through a repeat of that validation process that they've already done. It shouldn't take weeks or even months sometimes for businesses to open up a bank account. It shouldn't be that difficult. It should be straightforward. And it has to be straightforward. And there's no excuse for anything, and you can be fully compliant with all the different aspects of your regulatory environment. There's no issues with that whatsoever. It's about the process that you use, and about how you engage, and about the technology that you use to make sure that customer experience is at the forefront. So if you want to bring a really, really good customer experience to the consumer, be they a personal or business customer, that's what we're trying to do. So we're making these accounts. We've got nearly, I think it's over 600 businesses now using Fire, as live, as their primary account for getting paid. We call it a digital account, and they use that, for getting credit transfers in and out in sterling and euro. And it's incredibly exciting because they're using that, and there's a full, again, there's so many things that have to change, because when a business sends in a payment today, they send in, effectively they're telling the bank, take this money out of my account and send it to that account. But there's no more data with that transaction. And the typical legacy banking systems can't hold that data. So we hold all the invoice data, the customer reference numbers, and so on. So when you want to find a transaction in Fire as a business, you go and you search using the name of the person that you think you might have paid, right? Not going in through statements after statements after statements looking for transactions. You look for the third party that you've had, the relationship with, and what you do is you look for all the payments to and from that person. And you have a lot of data that you can then use to do, effective transaction monitoring to make sure there's no fraud going on. You can do better reconciliation, and you can extract the data. So we have customers now in England. So of the 600 customers we have, actually 350 are based in the UK. And again, with sterling, because we offer sterling and euro accounts. So again, if there's an Irish business needs to sell into the UK, and if they have a Fire account in euros with us, they can literally add a sterling account in real time. Click there, up pops a sort code account number, put it at the bottom of your invoice, you can now be paid in sterling. And again, you can pay out in sterling from that account as well. So it's really helpful. And we have customers there now who are using what we call our web hook. So in other words, what you can do is you can get money into your account, and then we will immediately send to a URL that you give us all the data pertaining to that transaction. So we can notify you in real time that money has come into your account without you having to log in to the account to see that money's come in, which means you can update your systems in real time and all that type of stuff. So again, there's a whole load of I would say that we've got some of the features of a current account incorporated into our digital account, and we've got other features that don't exist in a current account, if you like, to create this kind of new type of digital account. And then in November, then we'll be launching, we hope, the Fire card. So we've got a license now from MasterCard.
Wow.
And we're going to be the first non-bank, if you like, to launch it's not a prepaid card, but it's a full debit card off the sterling and the euro account. So we'll go live with that in November. So that'll be a big step forward for us, in terms of trying to go to market with, an alternative product that I think and I hope. Again, it goes back to your point about the survey monkeys, and hopefully, based upon the research that we've done, that that consumers and businesses will like the product, because it's it'll mean as well that when you're traveling into the UK, you can put money into your fire account in sterling, and you can go withdraw money directly in the UK in sterling without paying
that fee.
Yeah, without the fees and stuff. Yeah,
that'll make a huge difference.
Yeah.
Because it reminds me of the way Amazon now are launching pop-up stores and actually getting the virtuals going physical and the digital's going physical. And it's brilliant. But your timing is perfect. And I was thinking about this. One of the things the banks can haul, I suppose, or hold against a startup in the PSD or the API economy is the fact that they don't trust them, or they're young, or there's two young startup guys here. They don't know anything about security, etc. But you have a pedigree in this through, founding and selling on Realex payments. And that rich pedigree of all that makes you a real sure bet. But on top of that, you've got those 600 clients as well. Those are active clients.
Yeah. No, I mean, when we bought Fire, when we sold Realex, so Fire was a part of Realex and it wasn't part of the sale. So we effectively spun out, if you like, 18 months ago, and then we've been redirecting, because its original proposition was something different. And so we've kind of redirected it now towards this kind of alternative bank account or alternative current account product, which we call the digital account. And we're really pleased about that. We, like everybody else, we struggled for a little while because I think when we looked at the product and we realized that our consumer offering wasn't even a minimum viable product, it was still a non-viable product. And so we kind of switched the focus towards the business market, where we realized that with similar functionality to that as the personal customer, we were able to get businesses to sign up, because for businesses, that's okay. So one product can be a non-runner for one group of people, but can actually be a great success for another group of people. And that's something that you've got to remember as well. So we found that with the same product, but with a different skin on it and a different approach, businesses loved it. And so we've had, I think it was yesterday, we had something like 12, 13 businesses go live in a day. So on Fire, like you using Fire as well. So that's, for me, that's really something to focus on now, because that's good, obviously. Yeah, so you can focus on the good things and the bad things in your business. And so we're really pleased with that. So, we've got high hopes for it. And, we've got excellent banking relationships at the back end, because we're members of the faster payment schemes in the UK. We're members of what's called BACS. We're members of the SEPA credit transfer system. So we're now a member of MasterCard. So we're joining at the back end. So over the course of the next 6 months to next year, we'll keep adding on more and more functionality, making that account, better all the time. And our proposition to our customers is we want them to bank less and to do more with us.
Yeah.
So we're not saying close your bank account. We're saying, open up a Fire account, start to use this for some of the payments. You'll find out that it's really useful, really handy. It's a great way to pay and be paid. And we've actually implemented a couple of really nice things where one or two charities now are actually taking Fire online. So they're using Fire as a payment method, and they're putting up Fire QR codes on their websites, and then anybody with the app, the personal app, can actually scan the code and pay them in real time. So we have a couple of schools and clubs that are going to try it as well. I like to try and see, can they get people to pay them? So it's it's very interesting, and I suppose what you've got to watch in business is, the difference between something that's interesting and something that's really useful that somebody would pay you a fee for.
Yeah.
And that's you've got to be careful that you don't make everything really interesting, but nobody wants to buy it.
But one of the things you've done is, like I heard you talk about this before, was not assume that the team already know what the best product is, and you hired people who'd be using the product.
Yeah.
And I think that was really resonated with me, because it's like, let's take some media or journalism now, even that you don't have necessarily so people go, oh, millennials aren't using it anymore.
Yeah.
Well, that's because no millennials are working in your company, and no millennials are inputting on what the product is like, because because if you ask them through a Survey Monkey, they probably won't even take them, because they're not on the places that they would receive a Survey Monkey link.
Yeah. And it came up at one of our offsites actually during the year, where one of the guys said to us, like, we don't eat our own dog food. And we have to, you've got to consume your own product, like morning, noon and night. So all the people in Fire obviously have Fire, but they've also got Fire business accounts so that they can see, and logging into that interface every day. So you have to see what that experience is like, because what our challenge now is very different to the Realex challenge. When we were making Realex, people wanted to sell online. They needed a gateway. They didn't have one. So we were in the fray. We had the opportunity to pitch to be that company's gateway. Right? With Fire, it's very different. With Fire, most people already have bank accounts, and they don't necessarily need, therefore, a digital account from Fire. So we have to make sure, therefore, that we're way ahead in terms of the customer experience. And the customer experience that you get of opening, downloading, dealing, using a Fire account is so far above that which you're going to get from using a traditional bank account that you're going to say, yeah, I'm going to use Fire, right? So that's a different type of challenge to that which we would have had with Realex, right? So therefore, you've got to understand that. And I think it's a tougher challenge, because, as I say, there is an element of inertia, but at the same time, I think people are more willing to try these days, and particularly businesses. I think businesses are very keen on making sure that they get a very, integrated experience with their banking. They want lots of data in there. They want access to the data. They want it to be secure, and they want it to be accessible, like through mobile devices. And a lot of small businesses are really behaving and have expectations that are more akin to a personal customer than that of a corporate customer. So in other words, many SMEs are serviced today by banks as though they are corporate businesses, but in actual fact, they want the service that they really get from a personal perspective in their business world as well. Financial services is a great place to be in then right now, because it's got so many opportunities, and those opportunities are coming because of all the changes that are happening in the sector.
One last question then is for some young startups trying to get into the space, or any young startups, what advice would you give them? Because, like, to sum it up, I was kind of thinking business, even when you started Realex versus now with Fire, business has changed where the CEO job is not just to actually create a product and sell it or advertise it. You have to work on culture, you have to set your strategy, you have to set the vision early, but also your product is becoming its own advertising. I mean, you're probably less advertising, you're actually trying to get people to invest in the product and take the product, and then that product needs to be constantly reimagined and reevaluated every single day, even this constant cycle. Because before it was like, I'll build a product, I'll get loads of advertising behind it, and I'll sell it.
Yeah. Which you can't assume that anymore at all. And those days are gone, I think it's very hard for, I'd find it difficult to kind of, advice is kind of, it's one of those things like, it can be, it's kind of like what's the biggest lesson maybe, that I've learned over the years, I suppose, from my perspective, is that you really have to persist. That's one of the things that I found, like you really have to stick with it. And there's enormous kind of ups and downs, and there's enormous turmoil, and there's enormous roller coaster of kind of good days and bad days. And you can kind of fluctuate from one to another very quickly as well. So you tend to move quickly from, what's a great success to a huge problem. And somebody comes up to your desk, Colm, do you have a second? And it's bad news. And then somebody 2 minutes later, Colm, do you have a second? And it's good news, And so I think, it's not advice, but I think the biggest lesson for me has just been learning to cope with that, with those ups and downs, and the frequency with which the temperature changes is really important, and try to stay level-headed, through the good times and the bad times, because in the end of the day, it does become a smooth curve, eventually, if you can get it that way. And if you can persist, and if you really believe in what it is that you're trying to do, to be a bit, I suppose, dog-headed about it and just stick with it,
Yeah. And how do you manage that yourself? I mean, how do you manage that from your personal stress perspective? Even
very badly, with lots of alcohol.
Seen a lot of people in the office with black eyes.
No, I mean, like, I suppose I'm the type of person who would typically have maybe several projects on the go at the one time.
Yeah.
So, I suppose that energy, thankfully, comes from somewhere. I suppose, I think most of all, I love it. So I really enjoy it. And I enjoy the challenge. I enjoy the experience. I particularly like the idea of sometimes you get hit with this blank page, like you've got to try and redirect the company, rewrite the strategy, and you don't know, like, how you're going to go about doing it. or you're going out to do a pitch to somebody. And selling is really addictive as well. You know, it really is. Like once you start selling in your life, you just realize like how rewarding it is to be able to go into somebody, make a pitch, and to be able to come back with a contract. I mean, that's such a good feeling, you know. And
it's such an undersold thing as well. I mean, like I've often said this, like selling is seen as a dirty thing, and everywhere.
Far from it.
It's the most important thing in your business.
Yeah, as a friend of mine said to me once, he said, you know, in business, you're either making the shit or you're selling the shit. And if you're not doing one of those things, you're an overhead.
Yeah.
You know. Yeah. And I think sales for me has always been a huge attraction. I've always loved it. And I you know, while I love making product and I love product and product design, and I'm really interested in the design and how design, you know, I'm really interested in the idea that like you can make something the same as what somebody else has in terms of function, but you can produce a better design and you can win. That I find really fascinating, particularly in this stage, and that's because customers' expectations have changed. And then how they interact with you is different, and what they want from you is different. But then if you can sell it and if you can get into sales, so I would spend, you know, I a lot of my time thinking about the sales and thinking about how we can sell and, you know, trying to get out there. And I really enjoy that aspect of it. So I think from a personal perspective, I think the energy comes from the team as well that I have around me, right? And the support that I get from others as well is still great. And, you know, we're very keen to keep going, and as well as fire, then we've other investments that we manage as well. So we you know, we've got a great team of people who help us to do that. You know. Yeah.
Well, Colm Lyon, founder of Realex Payments and CEO of Fire, Pay with Fire. Thanks for joining us.
Great. Thanks, Aidan. Great.
Thanks, Mark.
Thank you.
So now on the Innovation Show, we welcome Paul Rohan of Rohan Consulting. Welcome to the show.
Thanks very much, Aidan.
So I read your book, PSD2, in plain English, and it is a fantastic read for anybody involved in fintech or banking or any financial services. And before we talk about that, Paul, it'd be great to understand your background coming up to this book and how you've learned so much and packed it into such a plain speaking book.
Okay, thanks very much. I suppose in terms of my background, my career and my activities over many, many years seem to have always been at the combination of financial services and the digital economy. And I started out in banking, in international banking, and I still remember delivering instructions to a TEDx room. Okay, and believe me, back then TEDx was high tech. It was as high tech as an Irish bank got in terms of sending messages and exchanging money with banks on the other side of the world. So I progressed through that process and very much involved in creating electronic banking solutions in the 1980s and the early 90s, even predating the internet. Okay, vividly remember the advent of the internet. I think I was involved in putting together the first banking website in about 1995, which was nothing more than morning commentary from our dealing room going out on Ireland Online. So that was the advent of high-tech banking in those days.
And when was that, Paul?
That would about mid-90s, okay? And when I come across young entrepreneurs today talking about mobile digital fintech, I tell them a unbelievably true story that I was involved in mobile digital fintech before mobile phones. So back in the mid-90s, in AIB's Treasury Department, we would have connected our dealing room databases with all the various foreign exchange rates. And bear in mind, this was pre-euro, so every European country had its own currency. And through early SMS technology, we were sending out those rates to electronic pagers. So we had given hundreds of electronic pagers to our best corporate customers. And when the French franc or the German mark or the Spanish peseta moved, we could actually alert these guys, because guess what? It was pre-mobile phones, so they would get to a phone. Wow. So we had it segmented.
The first push notification.
So this was mobile digital fintech before mobile phones. So in that respect, I have a lot of background in that space. And then we faced the challenge of digital commerce from the 90s onwards. Banks, I suppose, are not prisoners of their past, but they're grappling with their past because they have been building systems and processes since the 70s and 80s, and modernizing it to the modern modular environment is a mammoth task, because in some ways it's like trying to switch from Boeing to Airbus without actually landing any flights.
Yeah.
So trade can't be disrupted. People's business has to go on. So there's a vast retrofitting exercise going on across the industry, assisted and prompted and catalysed by regulation, new technologies. So a giant game of chess.
Yeah, but isn't that like you've a deep understanding of innovation, and that's basically what most companies are going through. Any traditional company that's based on legacy practices is going through the same transition, and it's like keep the current business going while working on another business or several businesses in between, because you don't know which one's actually going to come to the fore.
Yeah, and that's why it's funny. People have a funny perspective on brilliant businesses, and I'm probably showing my age here because they would focus on the most modern cutting edge businesses that have emerged in the last few years and have achieved hyper growth. Okay, and they tend to come from Silicon Valley because you can get to a couple of 100 million customers without even going international in the States effectively, and they have that critical mass of capital and talent and stuff like this. So younger people tend to find companies that have emerged in the last few years and have beautiful, intuitive solutions as, these guys will be around forever. Whereas I show my age, I think IBM is a phenomenal business. Like, can you imagine being right up there for decades?
Yeah, and they keep reinventing themselves.
Keep reinventing. And sorry, they stick to their core, and there's no doubt they'll have lost some position. But to still be up there in the top rank after 30, 40 years, I think that's phenomenal.
Yeah.
Because in terms of sociology and incentives and people's behaviour and dealing with vast numbers of staff, I'd argue that's a more remarkable leadership and management achievement than some of the single product businesses that have achieved hypergrowth in the last number of years because they've caught a wave.
Yeah, and I have to agree with you because, and even the fact that, this was before this kind of madness of the VC funding that we see for some companies that is. It's much easier to get funding today than it was back then. Yeah. But also, I'm a huge fan of IBM and what they've done as well, and Microsoft. Yeah. And, people kind of go, what kind of jobs did you do? I worked in a pub when I was 16, and I wish I worked as a cleaner in Microsoft and got stock. I didn't get paid, I got stock, because if you look at their stock growth it's consistently growing, and they've such a varied portfolio. Purchases like Minecraft, like brilliant thinking. And there's such brilliant people in those companies, and they get criticized from the outside world, being compared to Apple and Facebook and Google, etc. But Microsoft is one of those companies like IBM that has many pockets of innovation, consistent innovation within inside.
Yeah. I think as well, the very big companies are getting cuter in terms of responding to the waves of innovation. So I remember in the early 2000s, maybe 2002, meeting somebody senior from Apple at an event in the States, and they were on their uppers. And iTunes, although we didn't know at the time it was part of a sequence of initiatives, it was the last roll of the dice. Okay, but they weren't going for trying to respond to the stuff that had disrupted them in the current wave. They were looking beyond the next wave. So I think the Microsofts, the Swirls, and the IBMs are the big companies that have been successful in the past. When they find themselves challenged by a new wave of innovation, they're getting cuter. They're not actually trying to respond to that wave because to some extent they've missed the boat.
Yes.
They look beyond the following wave where they actually have 3 or 4 years to prepare, and that probably they have the capital. Okay, there's no doubt about it. And they have the talent. But in terms of mobilizing the big bureaucracy that they've built to service the existing success, that, they don't try and respond to the stuff that's going to cause them problems in the next 6 months. They look to the next 6 years, and then they can turn the oil tanker in time for that. Yeah. So I do think the big established firms today have a better sense now of how to respond and not try and be nimble for something that's going to cause them problems in the next 6 months. It's the big wave beyond that.
And that's a lovely segue for PSD2 as well, because we have something similar there. So it'd be great to understand firstly what PSD2 is. And, I can't recommend the book highly enough because it does break it down into plain English, and I know that was a process in itself going through that, but it'd be great if you brought us through what PSD2 was.
Yeah, well, I suppose there's a combination of motivations. First of all, PSD2 is short for the second EU Payment Services Directive, so that's quite not as catchy. Therefore, we shorten it to PSD2. What it is quite a mould-breaking intervention by European regulatory authorities. And it's quite a change in direction for Europe because in terms of its impact on a country like Ireland, the euro came in 1999 and it harmonised the central bank systems in Ireland with all the other central bank systems in the Eurozone. And then in 2002, we got our notes and coins. So in that period of time, the transition to the euro, the biggest payments, the ones that go between central banks, were harmonised to a European platform. And then the smallest payments, which are a fiver for this and 2 cents for that, were also harmonised to European standard. In the following years, all the tedious stuff in the middle that people don't realise is there around payroll, direct debits, which is actually a vastly bigger project, called the Single Euro Payments Areas, took place. And that ultimately happened in 2014. So we had a period where many countries were in the Eurozone, but actually all had their separate daily banking, daily settlement infrastructure. And it was the biggest banking project ever to harmonise those platforms. So I'm ashamed, stroke proud to say, I was on that project all the way through. And I once stood up at a conference in front of some techs who laughed when I said that I've been on a project for 14 years. And then they were quite pleased. And I said, well, I thought there might only be 3 or 4 years left. But all of these things were harmonisations.
Yeah.
Okay. And we'd sat around the table and we'd haggle out an improvement, but a harmonisation of German, Italian, French, British, Irish standards into something that we could all live with. So it was harmonisation. PSD2 is actually mold breaking in that it's absolutely greenfield. And it's the European regulator trying to effectively provoking a big transition in the openness of the banking system, but trying to do it in a controlled fashion. Okay, so some of the technologies people in the street are seeing now, where you want to use a new app or a new service, and rather than go through the tedious process of keying in all your details and your email address and stuff like this, it asks you, do you just want to use your Facebook profile or your LinkedIn profile to identify yourself? All of these sharing, composable businesses that are emerging in the modern economy is coming to banking. And your bank account data, which, if you choose, can now be shared with third parties. Okay, so as things stand, there's no regulatory onus on banks to make your data available to a third party. If they're to do it, it is on the back of a commercial contract with you and a commercial contract with a third party. This is regulatory intervention to make bank data a more dynamic commercial commodity.
And it's interesting you used the analogy of the social sign-in. So when Twitter or Facebook or LinkedIn ask for, is it okay for another third party to use your data?
Yeah.
For people to understand that, because that is essentially giving your data over to that company, depending on what you sign up for.
Yeah.
So I thought that was a really good, that's how I understood it when I looked at PSD2, that I might use Fire, for example, pay with Fire, and it might go, Pay with Fire would like to use your details, and I'm a customer of Bank of Ireland or AIB, and it might ask me, do I want to use that? That's how it will work.
That's how it will work. But bear in mind, Pay with Fire or another innovative third party like that has to go through a regulatory process.
Yes.
Okay, so a startup without proper data protection, without proper information security, without proper capital, without proper contingency plans, won't get an option to ask you.
Yeah.
Okay.
So there's a huge amount of work on the startup side.
Yeah, there is. And there's also risk in that there's probably a manageable amount of risk in terms of Facebook or Microsoft or Pay with Fire or your auditor or your accountant asking, is it okay to get at your bank data because it's efficient and it'll save us all money and time. There's risk in that a fake Microsoft or a fake Facebook could ask you for access to your bank data. So the regulatory authorities and the industry are trying to generate this economic value and this customer value, and at the same time preserve probably the most precious thing of all, which is confidence in the integrity of the financial system. And
is that a way that? So you mentioned about the fake company. So there's a huge opportunity, I suppose, for fraud.
Yeah.
But at the same time, can the bank dial up that and control who it wants to work with in a way and kind of go, you know what, these two guys in a garage, Wozniak and Jobs, I don't trust these guys.
Well, these things are being hammered out at the moment in terms of the detailed standard, and the big haggle between regulators and fintechs and banks in terms of the security controls. I think the best way to understand the challenge here is that some of the processes that will emerge under PSD2 are going to bring an effective rival to the first time to the card schemes. Okay, so the card schemes have been with us since the late 1950s, and people have the man on the street has a smell for danger at this stage around their card. Okay, you don't hand it over to just anybody. You keep it on your person. You kind of want to know the retailers you're dealing with, even online, when you use your card. When somebody emails you that you don't know and asks for your card number, you kind of know, I'm probably not going to do this. So there's been a big sociological diffusion of the card schemes over more than 50 years, and people have a nose for danger. There's fraud. There's an attack vector that the hackers and the fraudsters use, and then there's all of these people who defend against it. And you now advise your bank when you're going overseas through some mechanism that you're going to be in a strange country, so they don't stop your card or things like this. So there's an environment that's 60 years being established. We're now the regulators want competition for the card schemes, and PSD2 is an enabler of that. And we're trying to truncate the same level of, obviously, the same level of security for large transactions, small transactions, but at the same time to trying to bring a lot of client education into a very, very short time frame.
Yeah, and what is the time frame?
The time frame is that this will pass into law in 2018 in every EU member state. Yeah. There's some ambiguities yet in terms of will all the regulatory technical standards be ready in terms of how physically everything's going to be handled, and then what will the regulator's disposition be if it isn't fully live at the time. This is not unusual in terms of some of the European initiatives. But how will I characterise it, Aidan? It's a rolling start.
Yeah.
It's a rolling start. There'll be elements of it that get up and running faster than others. Some banks will go early and introduce these types of services even before they're obliged to do so, because they'll see an opportunity to get the jump on competition, to maybe build relationships with some of the most progressive, well-capitalised fintechs. So quite a complex and dynamic environment, changing a lot of things that have been established for many decades in terms of a rival to the card schemes, more progressive ways of sharing data. This is exactly what the regulators want. Okay, they're looking for new mechanisms. They're looking for new competition. Certainly, European regulators want to see a more dynamic European economy starting to rival Silicon Valley. So they're shaking things up.
When I read the book, I was like, this is like a playbook for a bank. It is that good that it just goes, basically, you just follow this, you're doing everything right. I'm just going to take a step back for a second, Paul, because you mentioned APIs, and we have a jargon jar on the show to explain what APIs are, because we take it for granted. But I think your explanation of APIs in the book is really good. Can we run through that for a second? Yeah,
well sorry, I did the most vivid physical analogy for APIs, I suppose, is the wall sockets we see around us every day, which, stepping back from the physical reality of it, they're an abstraction layer. Okay, so there's guys out there in the power generation business who are trying to decide whether to abandon fossil fuels, and what will the regulatory disposition be about nuclear, what about wind energy, wave energy, vast investments, big decisions to be made. Do they get them down cables that are underground, on pylons, all this type of stuff? But the end point they're aiming for is the wall socket. Okay, so they don't have to worry about getting to a point in your house where you get a jackhammer, okay, and break open the wall and then plumb in with little bits of different coloured wires your TV or your microwave. Okay, so they're just aiming for the wall socket. And the wall socket expects 2 prongs if you're in Europe, 3 prongs if you're here. Are they round? Are they square? What's the voltage? Okay, so it's an interface, an abstraction layer. And then on the other side of the wall, there is your TV, your microwave, your cooker, your devices, all this type of stuff. And they're oblivious to whether it's nuclear, wind, wave, whatever it is. And so 2 vast industries interface through something very simple but very, very powerful, predictable design. Okay, so what APIs are equivalent in the software world is an abstraction layer where an endpoint that 2 different processes can aim for. And how I'd contrast them with something that people in the man on the street would be most familiar with would be websites. Okay, websites develop information to an endpoint, but if material moves from one page to another, or a button changes in sequence, you're probably going to find it, because a human is adaptable and flexible, and you'll keep going till you find it. a website is a human readable interface. Okay, but nevertheless, an abstraction layer between a business and a consumer. An API is a machine readable interface, which means that the machines can come in and get data and get processes from the API, but the API itself has to be really, really precise. Okay, so a computer program is powerful and fast, but it's dumb. It needs to find stuff where it's been told it's going to find it. And therefore, unlike a website, the API has to be very precisely engineered so that other programs and processes can come in and the API behaves exactly as predicted, and data and or processes can be extracted by the other program. So machine readable interfaces.
Yeah, and it's a huge, I mean, apart from banking, the whole world is going that way. It's an API economy now. And, you also used the analogy of Lego blocks, that your content needs to be atomized into these blocks that are understandable, but also help you build easily. So if I am a website creator, my content is the energy going through, and then it can easily be picked up by an app or an aggregator or whatever it may be, and full metadata, any kind of data I want to put into that is pumped through the API, and it's I mean, that opens it up for such disruption. And to come back to, you mentioned the cards, so Visa, MasterCard, for example. Like, so there's new competition for those guys now coming as well. So can we talk about the disruption in that world? Yeah,
well, I suppose payment methodologies by their nature have a tendency to monopolize. Okay, by their nature. So trade is complex enough in terms of actual physical goods and services, or goods and services that we want to actually exchange, than having big ambiguities around how we're going to get paid. Okay, so it's nothing to do with the people working in these processes, but like barter was a monopoly at a point in time. Okay, then coins came along and became an effective, well, not a monopoly, but there was probably some barter, but a dominant means of settlement. Okay, then checks came along and became the dominant means of settlement. So by their nature, these things can get tired and old-fashioned compared to other parts of the economy, but there's so much unpredictability in the general trading economy. Business people and consumers just want predictability around how we're going to settle. Okay, so these things can get dated, and in certain cases they can get so dated that they hold back the general economy. Or because these things become a standard method, economies of scale come into play. Okay, so competition tends to happen either on economies of scope or economies of scale. You know, economies of scope, I do it different and better, or scale, I do it more often and cheaper. Okay, and because methodologies of settling between ourselves become dominated by a certain method, it tends to end up that 3 or 4 providers of that method end up with 80% of the market. Okay, it's an absolutely natural phenomenon, and 2 things tend to happen to break that up. Sometimes in combination, sometimes separately. Sometimes a spectacular new way of doing things comes in and supersedes the old ways over time. But it has to be very powerful, okay, because we all want to get paid and we don't care, it's a bit clunky. Or there's regulatory intervention, okay, where the providers that have achieved enormous economies of scale with the standardized method are making supernormal profits. Okay, so to put it mildly, antitrust regulators and the card schemes have had a colourful relationship over many decades, partly because these platforms tend to achieve dominance with asymmetric pricing. Okay, so I sometimes get into trouble by describing asymmetric pricing as discos where one gender rather than the other get in free. Okay, so I'll try and pick one way that's least offensive to explain this. But if there's a disco where all the girls get in free, probably displaying my own orientation here, all the boys want to go.
Yeah.
Okay, and that's asymmetric pricing. Notwithstanding the fact that they have to pay a $5 in, if they think all the girls in town are going to be there, they go.
Yeah.
Okay.
Network effects.
Network effects, right? And I suppose the card schemes work on that basis, whereby they are a spectacular deal for consumers. You know, people who traditionally who have accepted cards have to accept all cards. They can't charge you more if it's debit or credit, even though they're being charged different rates. So in that asymmetric pricing approach to build the platform and acceptance, you have regulators intervening then trying to make the pricing less punitive on one side rather than the other. So this has been a trend for many, many years. And so they can cap pricing And one of the things the European regulator has done is cap pricing in terms of some of the card schemes mechanisms. But ultimately, the purest way to create competition and choice for consumers, given this natural dominant effect of settlement exchange, is they're trying to create a rival for the card schemes.
Yeah.
That's what they're doing here.
Yeah.
So it could end up with an equivalent amount of volume to the card schemes. It might end up with a lot less volume than the card schemes, but actually force card schemes to drop their prices.
Yeah.
So there's two ways to the regulator's goal.
Yeah.
Genuine competition and then price competition.
Yeah, and like in fairness to the card providers, they've been they've all innovation labs. They've probably been preparing for a day, you know, with a lot of projects that are put on the shelf, and now may have an opportunity to be taken off the shelf to kind of, I suppose, to counteract the competition that's coming their way.
Yeah.
There's one thing you mentioned in the book is about the loyalty schemes. For example, using with the cheapest retailer, for example, like that, around the card schemes as well. Can we touch on that?
Yeah. Well, historically, since the 1950s, you can argue that we've only had one payment rails, which is, forgive me, some industry jargon in terms of the underpinning rule book and clubs that are set up to exchange value between buyers and sellers. We've had one rails. Cards came in the 1950s. When internet commerce came in the 1990s, there was only one global standard of exchange for the globalization of websites, which was credit cards. Okay, it was the only way you could target your goods or services at a consumer in Ireland and America and South Africa. Okay, so there was only one rails, and sometimes with cards as loyalty schemes, as incentive to use your card more often, stuff like this. We're now heading to an environment where there will be two rails, okay, if the European regulator has their way. And by definition, one will be cheaper than the other, by definition. So you may find shops, either online or offline, trying to push you towards the scheme that's cheaper for them. Okay, so you could go into Tesco's, and Tesco's could go, if you use the card or non-card mechanism, will give you 100 loyalty points. Yeah. Okay, because they've worked out that giving the consumer 100 loyalty points is a lot cheaper than using the more expensive scheme. Yeah. Okay, and then you'll have other instances where the two rails start to compete for loyalty with the consumer, saying, listen, whether you're in Tesco's or whether you're in your local pub or whether you're in your whatever local service, keep on using my rails, okay, notwithstanding what the shopkeeper has on a sign for loyalty, and I'll give you incentives.
Yeah, and it's kind of, I suppose, like the way in some shops you go, if you have a minimum purchase. So if it's under €5, you have to pay an extra 30 cents or something like that. Yeah. And that's what's being hit. That's hitting their bottom line. So they're putting an incentive in for you to pay more. Yeah. And this is an equivalent way.
Yeah. Well, I think the regulators are very sensitive to things where, because the card schemes have had such a dominant position at low values, it's expensive for so if you go into a local coffee shop and offer your credit card to pay for a cappuccino and a bagel, and it's €7, it's expensive. And in that, it's perceived as expensive given the very small values, and that's why you have signs that actually break the rules of card schemes and windows saying no cards taken below €10. Okay, so that's one of the things the regulator is trying to deal with, and bearing in mind that there's a big, because when the shopkeeper says this, I don't under €10, somebody fishes out €10 note, and there's a big social cost to cash. Okay, cash fuels the black economy, cash fuels money laundering, people with guns try to take it out of vans. There's a big social cost that isn't actually apparent to the users of cash. So public policymakers have a big incentive to move towards electronic, okay, for safety, for efficiency, for tax collection. So there's a big public policy agenda around that, recognising that there's a big public policy issue around urban and rural. And there's no point in just having policy that works great in the cities and doesn't work in the countryside.
Yeah, wow. And so we've talked about APIs, we've talked about the banks, and we've kind of looked bank facing, but there's a whole other economy that can spring out of this, and it's coming from the account information service provider. So if for example, on an API, it's not just about my transaction, it becomes about the information about my transaction. So for example, my accountant
Yeah.
all of a sudden knows exactly what the ebb and flow of my cash is, where I spend my money, what products I buy, for example. And if you think of, you mentioned the supermarkets, they know exactly what kind of products I buy, so they can give me offers to buy more of that product or less or an alternative product, etc. But for there's a whole new economy that could look at the API and actually offer you price comparison websites, for example. But also stuff like you mentioned, tax. They can access that. Look at your account and kind of go, you know what was that payment on the 23rd of August?
Well, in many ways, I think the real economic value and the transformational value of PSD2 is in the small business space. So I spend a lot of my time explaining PSD2 to people in a consumer context because we're all consumers, okay? And everyone can relate to their own purchasing patterns and how they behave versus maybe their parents' generation. So it's easy enough to explain. But to be blunt, the value to the economy of a 18-year-old in Starbucks using one app rather than the other, and in fact, all the apps on their smartphone are free because guess what? The 18-year-old doesn't have much money. Okay. In fact, the economic value of sharing data looks like it may be far more profound in the small business space. So if you think about small business more broadly, small business is absolutely pivotal to every national economy on the planet. The small businesses are, they absorb people of every skill level. They serve regional communities as well as wealthy urban communities. If your small business are in rude good health, you tend to have full employment. Okay, and how I explain this to people is that, when a small town is supporting 3 butchers, okay, the butcher on the prime position on High Street that's been there for 80 years, then the guy who's still on High Street but down the end, and he's been there for 30 years, but there's actually a guy down the side street who has only been there 3 years, wasn't born in the town, but actually is still making a living, you'd probably tend to have full employment. Okay, so when the butcher down the small side street in the small town hires an apprentice, you probably have full employment. Small businesses, the only source of external capital infusion they can get tends to be bank loans. The butcher in the small town isn't going to attract the venture capitalist. They're only going to generate a certain amount of capital from retained earnings, friends and family. Okay, when that butcher down the side street wants to expand into the unit next door and widen the counter, carry more stock, and hire an apprentice, the main source of external capital tends to be the bank. Okay, bank debt, and in that context, that butcher down the side street has no accountant. Okay, probably assuming they have the skills, may not have the time to sit down and work through their cash flow patterns, the seasonality of cash flow for the last 3 years. If they do have full books, they're on scraps of paper, they're on physical bank statements, they have their own paper-based ledger, the book in the corner of the butchers. So even if this guy should get the capital to expand into the unit next door, getting the data together to allow a lender say, yeah, this guy is not going to have any problem, even in a downturn, he'll pay back this loan. Okay. The cloud economy and the API economy looks really, really promising in terms of almost generating the loans by sensor. Okay. And it's not just a matter of the guy's cash flows. Many of these small businesses, okay, the butcher is a retailer, but you'll have small businesses that are business to business and they'll be invoicing. Okay, we're looking at a future now that's quite immediate where all the invoices that the small business has written or accepted are accessible. The data is accessible through an API from their cloud accounting package because now their accounting package is in the cloud. Their accountant can see their daily transactions in the cloud, and if they get behind in their entries or get behind in their reconciliations, the accountant can intervene and not wait till the end of the year. And because bank data is opening up, where the butcher thinks he's at or where the small business thinks they're at and where the bank thinks they're at will be automatically reconciled. Okay, so we may be going from an era whereby, a small business produces a balance sheet and a profit and loss in November, because if they don't get their tax liability into the revenue tomorrow, they're going to be paying a fine. Okay, but actually that data is last year's accounts, which no self-respecting lender will accept. They want to know how you've been doing in the last 6 months. we look now in the open data economy that, notwithstanding the fact that the small firm may not have the skills, the professional bookkeeper, the professional accountant, or the time to generate a loan application, it looks like the data set will be strong enough in the modern API economy that their ability to take on extra debt can be calculated remotely.
Yeah.
And that will be a massive breakthrough in terms of the economy, far more profound than kid in Starbucks swapping apps about.
Yeah, because it's that deep, and you know, in the world we're moving towards behavioral data versus declared data, and you know, declared data being the butcher example, kind of going, and he meets his accountant, and his accountant goes, "What was this then?" And he's trying to remember, you know, something that happened. But when it's behavioral and it's mapped behaviorally on in the moment, and then you can create means. And by the way you said about the seasonality, it's kind of giving you a mean what you're earning per month across the year. Yeah, bearing in mind the seasonality, that totally changes the game. But it also changes the time for your tax. Yeah. You know, so for an individual doing a tax declaration, but it totally I was thinking when I was reading it, I was kind of going, so in a world where artificial intelligence is coming in, an artificial intelligence can read that, because it's back to what we were talking about, the Lego blocks, so it's very understandable by machines. It totally disrupts the whole accountancy world. So your small tax accountant or even your tax advisor can be disrupted by this world as well. If you know, when people build the technology more and more for AIs to do that work. Yeah, accountancy and audit. I'm not quite sure the figure. There might be about 8 million turnover you have to have before you're legally obliged to have an annual audit. And many small businesses are in the market for debt before they get to a stage of legal obligation to be audited. And audit is expensive. Okay, so a couple of trainee accountants arrive in, sift through your books, look for unusual transactions, cross-reference everything, and then ask pertinent questions of your staff, and at the end give a rubber stamp that say, to the best of our ability, to the best of our knowledge, what the guy says is in his P&L and his balance sheet is accurate. Okay, which is massive comfort to investors, lenders, any third party who might be taking on obligations with that firm. In an open data economy where bank data, invoicing data, more and more of this data becomes shareable, the frequency, cost, incisiveness of things like audit processes can be absolutely transformed. In other words, the human gets involved when the strange, large, or first-time transactions have been identified by the machines and not identified by the humans. Yeah, I actually can imagine a couple of business owners sitting in the corner with data from Star Trek. Data, now just turn a blind eye to this. No, I must not. You know, so it makes it objective, I suppose, doesn't it? And it takes out human error. Yeah. But it's been fascinating talking to Paul Rohan, author of PSD2 in plain English. Last thing I was going to ask you was the cover of the book. So there's an egg breaking open. What's the relevance of that? It's much more politely phrased question, Aidan, than my kids who say, Dad, it's not a cookery book. Why do you have a cracked egg on the front? And I had a very, very clever graphic designer working with me. So a big shout out to Ellen Egan for her help on this. But Ellen identified that we needed a visual analogy to explain. And Ellen, to her credit, has no background in payments regulations or payments technology. And Ellen identified a crack egg in the basis of the regulation is breaking open the membrane of bank data, which has been held inside the bank, and now the ingredients will flow. Okay, so banks themselves will whisk their data into other third-party services, and third-party services will bring bank data as an ingredient into their services. For fun, sometimes dealing with very small fintechs, I explained that the regulation is pushing the banks off the wall, and Humpty Dumpty has hit the ground, and we're in an entirely new era where data won't be held inside the vault of banks, and under very controlled circumstances, because this is data about your money and mine and your privacy. In very controlled circumstances, this ingredient is now going to be mixed into many more types of services for everyone's benefit. Yeah, and it really does open up so many business, so many disruptions, and it's going to be interesting times ahead. So where can people find you, Paul? Amazon sells the book, but
In true Irish style, I'm available online if anyone wants to buy larger quantities for a staff education tool. It's effectively designed for non-specialists because this is something that's going to come mainstream in the coming years. So this is a primer text to get any busy business person through the whole area in about an hour.
And so it's Paul Rohan, or Rohan at rohanconsult.com.
That's it.
Okay, well, great to have you on the show, and thanks for coming in, Paul.
Thanks, Ed.